So we have new rules that leave banks struggling to lend, and Bank of America warns that investors are ignoring these dangers. Today, the Dow tumbled 1,200 points for worst day since June 2020 after a hot CPI inflation report. And the stock market is freaking out because inflation proves one thing, and that is that the Fed has the worst problem in the world and recession is the only solution. While banks like Bank of America warns that investors are ignoring dangers of synchronized policy tightening. And I received a suspicious email from Wells Fargo today that said, "We're updating the Wells Fargo online access agreement." That can't be good. Oh, and I received a comment on the live stream Michelle and I did today from a viewer that really made me laugh. It said, "Maybe I should quit my job and start putting out YouTube videos and rake in the money. No taxes, no responsibility. Just live off others." If you think that's how it works, go for it, buddy. But I can assure you that taxes still exist, and so does responsibility. And I don't know who the others we're living off of are, but I'm pretty sure you don't pay to watch YouTube. And even if you did, your YouTube premium account isn't even coming close to what we rake in on YouTube videos, primarily from ad revenue from advertisers who are paying Google AdSense and not the viewers who are watching these videos, more than likely 100% for free. It doesn't really cost you a dime to watch YouTube. But if you wanted to learn how to do it, build a YouTube channel, get subscribers, get views, and meet the requirements to apply to be accepted for the YouTube Partner Program, well, then hit me up. You can join the group. The link's below. All right, now let's get right into it. Wells Fargo & Co. has agreed to pay out a $145 million settlement in connection with a federal investigation into the banking giant allegedly overcharging employees for stock. Spokespeople for the company and the U.S. Department of Labor announced in statements Monday that Wells Fargo will put $131.8 million into employees' 401k funds as part of the settlement after the plan's administrator, Great Bank Trust Co., had used money in the retirement funds to continually overpay for Wells Fargo stock on behalf of workers. These jokers just can't be trusted. According to the investigators, from 2013 to 2018, Great Bank bought Wells Fargo preferred stock for as much as $1,090 per share. The same shares of Wells Fargo bank stock that, when allocated to the employees participating in the 401k plan, was valued at about $1,000 per share. Now, I'm not telling you to get your money out of Wells Fargo Bank if you have any in there, but I know I sure won't allow them to manage any of my funds after the stunts that they've been pulling lately. Just the other day, they were closing long-standing accounts for various reasons that they labeled and considered to be flagged high risk. And now Wells Fargo is announcing new changes that are set to go in effect on November 30th. So mark your calendars or pull your money out. Maybe. According to a timely email I received, Wells Fargo is updating their online access agreement, or the OAA, which will go into effect on November 30th, 2022. It goes on to say that when you enrolled in Wells Fargo Online, Wells Fargo Business Online, Wells Fargo Mobile, or Wells Fargo Advisors Online services, you reviewed and accepted our OAA. For more details, you can review a summary of changes and access the updated OAA. Your continued use or access of Wells Fargo Online, Wells Fargo Business Online, Wells Fargo Mobile, or Wells Fargo Advisors Online services indicates your agreement with these changes. So, if any of you guys out there are banking with Wells Fargo personally or through business, you may want to review this new OAA, this new online access agreement, before November 30th, because ultimately after November 30th, your continued use is basically your way of saying you accept to these new changes. And you may want to figure out what tricks Wells Fargo has up their sleeves before November 30th. But if not, I'll review it for you guys and I'll bring you an update on that real soon. And new rules leave banks struggling to lend. Some Turkish banks are curtailing corporate lending after the government's latest implementation of new, tighter, and strict banking regulations, which raise their costs and force many to cut their balance sheet risks according to banking and private sector sources, leaving us with many unanswered questions. But these are the things that we've been talking about, and a lot of the things that we've been covering here recently as far as the banks and the banks tightening up and mitigating their risks to reduce the amount of loss that they can occur. And the question is, could we expect to see this happening here in the US? And after a key August inflation report came in hotter than expected, hurting investor optimism for cooling prices and a less aggressive Federal Reserve, stocks fell sharply and the Dow Jones Industrial Average slid almost 1,277 points to close at just under 31,105. The S&P 500 dropped 4.32% to 3,932, and the NASDAQ composite sank 5.16% to end the day at 11,633. Tech stocks were hit particularly hard, with Facebook parent Meta dropping 9.4% and chip giant Nvidia falling 9.5%. You know, the one that Nancy Pelosi and her husband were invested in, doing some underhanded, potentially what seemed to be insider trading and underhanded options trading. Yeah. Nvidia. The drop erased nearly all of the recent stock rallies, pulling the S&P 500 back towards its September 6 close of 3,908 and causing some traders to glance back at mid-June when the index fell below 3,700. The August Consumer Price Index report showed a higher than expected reading for inflation. Headline inflation rose 0.1% month over month, even with falling gas prices. Core inflation rose 0.6% month over month, and on a year-over-year basis, inflation was 8.3% year-over-year inflation. How does that relate to your salary, your pay increase, or even your Social Security Administration benefits, SSI, SSDI, SNAP, food stamps, benefits, and the cost of living adjustments in comparison to 8.3% year over year? And these numbers just further discrediting economists surveyed by Dow Jones that had been expecting a decline of 0.1% for overall inflation with a rise of 0.3% for core inflation. But when are these economists and analysts ever right? The Fed will meet September 20th and 21st, and at that time, the central bank is expected to deliver its third consecutive 75 basis point interest rate hike to attempt to slow down inflation. And so because the last interest rate hike worked so well to bring down inflation, the unexpectedly high August report could lead the Fed to continue its aggressive hikes longer than some investors anticipated. Meanwhile, stock prices and company valuations are taking a beating on Wall Street. Cloudflare fell more than 10%, while Unity Software sank about 13.4%. Shares of the direct-to-consumer auto retailer Carvana slid 12.9% as well. And we've already talked about the anticipated slide in the automotive industry, in car values dropping. So these are going to be more topics, more companies, and more economic news coverage that we're going to have to keep a close eye on and see where this takes things, see where things go from here. I anticipate interest rates going up continuously as we reach much, much higher percentages. And I actually received a message today that the new conforming mortgage limit is now raised to $715,000. We're going to talk about that more in a future video, but between inflation on the rise, the Fed hiking interest rates continuously, and ultimately having no effect on inflation, really no considerable impact on inflation, the housing market decline, buyer confidence pulling back, the banks and their liquidity crisis, and the Fed trying to pull a rabbit out of their hat, now introducing $715,000 conforming mortgage max. That's the max before you enter into jumbo loans. So if you guys aren't familiar with jumbo loans, drop a comment below and we can talk about that. And then you add on top of that, Bank of America is making an announcement. They want to do away with credit scores and down payments for home buyers. This has bad news written all over it, but we'll keep an eye on it. You guys take care. Be safe. See you soon.